I think Wall Street was really taken off guard by the fact that we had not just one, but two banks failing. And clearly, that has now had huge implications for what the Federal Reserve might do with interest rates. We were expecting a half a percentage point hike next time. Certainly, a quarter percentage point hike had been fully priced in. Now the expectation is it will only be a quarter percentage point, and maybe we won't see an interest rate hike at all. So I think that investors are still spooked. When you take a look at European markets today, banking stocks are still down, although other stocks have recovered a little bit. I think investors are just keeping a lookout really for any further contagion, although we do know that certainly European banks are in a very different situation than those smaller banks in the United States.
Yeah. What do you think distinguishes the banking sector elsewhere globally compared to what has happened in the US?
Well, particularly when you're looking at the likes of SBB, it had very particular investments. It wasn't particularly well managed. It had bought a huge amounts of government bonds at incredibly low interest rates. If it had managed things differently, if it had a more diversified portfolio and a more diversified set of investors, then I think things would have been very different. But regulations were toned down during the last administration, and perhaps, people weren't paying as close attention as they needed to. In terms of European banks, they've certainly got far more solid liquidity ratios and very much a different regulatory framework. So I think regulators and certainly investors feel a little bit more happy with what is going on with European banks. But that said, this high interest rate, the end of really cheap money, is having a massive impact on businesses right around the world. And it is something that investors are just going to have to get used to.
Yeah, and that is a tricky one, as you point out. The interest rate hikes have been extremely aggressive. We've had that here in Australia, and there seems to be confusion about whether they are having the desired effect in containing inflation. We're seeing the profits of big companies going up, but we're not really seeing much wage growth.
No, wage growth has been particularly tricky in both the US and the UK and in Australia as well. Certainly, we've just had latest figures here in the UK where I am. And although wage growth has been pretty solid, when you account for inflation, people are actually seeing a pay cut. And you're absolutely right. These interest rate hikes have been put in place in order to cool inflation numbers. But that inflation is proving to be incredibly sticky. Now, some of that has to do with pent-up savings. A lot of people didn't spend as much during lockdowns, and they still have money to spend. A lot of that is due to the fact that the labour market is still incredibly strong. So we're not seeing quite the number of job losses, I think, that some people had anticipated. However, these rate hikes, they take time to filter through to the economy for their full effects to be felt. And I think a lot of people have been caught on the hop by what's happened with these two US banks over the last few days, and really will be thinking about what other hidden pitfalls we can expect over the coming months.
And we do definitely, Danny, see the tech sector as being very vulnerable. It's probably one of the reasons that precipitated this. We see big job losses in the tech sector and a real sort of you've got AI coming in and people are not necessarily certain exactly where the tech sector is going to go. Could that be cause for a lot more global instability?
I don't think we've seen the end of the job losses within the tech sector, because there was an absolute boom in hiring post-lockdown when these companies really thought that they could take advantage of riding this massive wave of consumer confidence and consumer use. Of course, as inflation hit, we'd all bought that kind of tech that we needed for during lockdown, and we were rolling back on that kind of expenditure if we didn't need to. So I think the tech sector has an awful lot of juggling to do. Investors are demanding that it cut costs in order to remain viable over the coming years and months. But as it does cut costs, of course, there is a danger that it won't invest in the next generation of tech, and that is where its money will be made in the future.
Danny, I really appreciate your time. Thank you so much.
Thank you.